Hey, so I decided to do another live stream. I just finished walking you through my Morgan Stanley and Hippo models, but figure what the hell. I'm gonna work on this anyway, so not really gonna say much except try to get this moving along. Um, Man, I wish I could play music, but I think there's some copyright things where posting stuff to YouTube with music on it throws a wrench into things. But anyway, I'm just going to leave my screen shared here for now. Kind of work in this. See how I want to. Actually, 4Q21's already out, so I can change that to actuals. Man, it's already been that long. But I think the big win for me was getting the schedule in here, so at least I can project this going forward, which is nice. It's going to be so. And this is going to be hard. Let's see if there's any seasonality in here. 70. Let's see how it was pre-COVID. Seems to be fairly stable. I mean, I can just call it 55 flat across the board, go from there. Really, the thinking behind that is at a macro level, people are going to have more investable assets just due to how the market's been performing. We're in one of the best labor markets we've been in for a long time. So let's see why that. So, and again, this is a starting point. These things get refined. So even if I, decide later on, I want to forecast this 55 based on a growth rate year over year, I can change it to that. Right now, I'm just going to hard code it. Market impact. So that's interesting. So it depends on what your view is for the rest of the year. It's going to be challenging, I think. Rates are going to go up, equities as a whole. You're going to have some upside, but it's going to be limited upside. So maybe I'll take that 20 down to call it 10. Let me paste this over. Right, so I've got 20. So essentially I have it growing constantly. So we've got go from 1.5 trillion to 1.8 trillion. At the end of 24. Again, my manager may have guidance on this figure. I'm not sure. So 80 basis points is kind of what I'm projecting here. Carry that forward. This is going to be wrong. Actually, no, because it doesn't carry over, so that's good. Typically for these smaller line items, I've seen, I'm just assuming you go flat 2021 is going to be some. All right, so I've got that. Commissions and fees. That's going to be an interesting one. Can you scale it off of, let's see what I've got down here. There's a fee rate schedule I could build out, but don't really feel like doing that right now. So the other thing I can do, let's just see how it's been trending. There's some seasonality in there, maybe not. Well, fourth quarter tends to be outside, so maybe I could do year-over-year growth rate. So I'll stick that guy down here. Growth. So -1. Okay. All right, so something. Okay, so basically from here, I'm gonna kind of forecast my own growth rate. Seems to have been growing. It's interesting. Significantly during COVID for the most part. So I could take that assumption, carry it forward. Maybe I'll just fade it. So I'll do 45%. 2022. That's 40. Maybe have that go down to right. So now you have a way to forecast commissions and fees. So that's going to be changed to actual. So I'll avoid 4Q21 for now. Take last year's, then you grow at 1 plus growth rate. Format it. Put that in for now. No, it doesn't make sense. All right, so we've got that. Oh yeah, asset management line. So we've got a way to forecast that. So we're good here. And I'll carry that out to 2024. Go out longer if you want, but I think for our purposes, I mean, you can only go out to 23 if you want, but okay, so what am I going to do about investment banking revenues here for this segment? I don't even know where to begin with this. So it's wealth management. Again, insignificant part. So I can do 100 going forward. Take the average. Let's see. 140. 40. So the average here is so it went up from 140 to 200. Average here is 130. So again, this could be a COVID impact in 2020 and 2021. So I'm 140. So, again, these are just starting points, not necessarily going for extreme amount of precision. Fourth quarter typically tends to be big, so I'll call it 220, 220, 230, 240. All sorts of weird stuff going on here. Call it 115. What is this? Pretty insignificant number, so I'll just do 10. Then we have the commissions and fees line item, so we can just carry this formula over, double check. Correct. And have it growing at 40%. Maybe that's too high. Maybe I need to check all this stuff, but it's over. And I can do kind of a year-over-year growth rate to see. So, okay. So we're projecting revenues to fall in 2022, which is interesting. That makes sense. He grew 20% between 21 and 20, 11% between, and some of that's acquisition driven. So what I remember from this company, they acquired Eaton Vance as well as E-Trade, so that could distort results. So what am I comfortable with on a top line basis? Well, actually, no, this is for a segment. So all the stuff I said about you, well, E-Trade and yeah, there could be an impactor from those businesses, especially wealth management. Yeah, that's a struggle. I mean, the other thing I can do is they don't have this for segments, but let's see where the street is. So this is another tool that I like. It's only $7 a month, but it's great. It's called Atom. Okay, let's see. Revenue, annual revenue. So 2023 revenues are 659. Consensus is at 59, 22. And I don't know where I stand. Great. Let's see if I could build this out real quick. Hmm. 32, but that I'm on a non-interest revenue basis. Interesting. All right, so maybe some more work to do there. Okay. I think really the goal for me at this point is just to build the segments out. And then right, except for 2022, there's some embedded growth in there in double digits. Okay. Okay. This is the other thing I wanted to build out too. Interest earning assets. All right, so this is going to be the boring part. So 635, 470. This is annoying to have that up there. Four 70. $35, 470. So what I'm trying to do is look for this table. Yeah, March 2029. Find the similar tables to this table. I'm gonna move this over for the time being to my other screen and start filling this out. Here's the thing about WallMine. I typically build models out going back 5 years in terms of actuals. This only takes me to 2017. I don't know how to get earlier results, so that's a bit of a pain. Okay, so that's for year end 2016. Let's open it. Always make sure to double check because it looks different here. Let's take that phrase. Open it filing. Okay, that was weird. All right, skip that quarter. Typically, this would open in the actual filing. I don't know why the links aren't working. All right, so option B, I can go into the actual 10Q, just do it like this. So you got your interest earning assets. $694, $650 is a number we're interested in. So that's the average balance. Net interest income. Okay. So I made that note to myself. This isn't hard coded. It's a formula. Okay, so your net interest here. I don't know why I called it net interest. It's just interest. Okay, so you've got 1747 on the asset side. You've got okay. That seems correct. So we've got 1.01% terms of annualized yield, 0.53. And then this 10Q, we've got 1% here on the asset side, 0.5 here. Then you've got 899 in terms of your NII, so we're good to go. All right, so it's just a matter of repeating this. Okay. 7. 651, 74, get a NIM, net interest income 913, so we're good. Okay. I know there are companies that are trying to do this, but whoever could take all the footnote tables and like create something automated through that is going to make a lot of money. Because as you can see, I'm basically inputting this by hand, which is good because I can see the numbers and get sort of a feel for how they trend over time, but it's really time consuming. Not the most value added activity, especially when you're operating with on a limited time frame. Okay, so let's see. Change the format on this. Let's see, 704274. Seems right. $1,003, good. On to the next. All right, so I reached end of 2016. I think what I'm gonna do, what I have to do, there's really no other option. Gonna have to back into a number for fourth quarter. All right, so okay, so I have an actual. Wait, I'm not even in the right table on this. 58991. Does that seem correct? I don't know, that number seems kind of off. All right, it is what it is. 672743318. Highest priority, but I am somewhat of a stickler for formatting. That just seems way too low. That means that fourth quarter. I mean, that's implying that 4Q16 balance sheet just shrunk. That seems really weird. Right, I'm going to try to look for the fourth Q16 press release. See if there's a breakout there. It just seems really weird that this would be the annual average, but you've got these figures floating around. Let's see. Let's see if we can get to the bottom of this. Okay. It looks like we have no color there. Okay, I mean it's the right part of the 10K, so this must be the number. Okay, so essentially this is going to be an average. That's one for now. So you want the average to equal this number. Man, it just seems way off. I'm just double checking a few line items like deposits. Seems right. All right, so anyway, we're gonna use our old friend goal seek here. So I'm trying to set so Trying to set this to 558991. Changing this. And this simply that minus that. All right, third. There's just something way off here. Then can't use this formula because it's already annualized, but yeah, that was weird. Still not completely sold on this, so I just highlighted. Oh, wait, that's hard coded. So this is this minus some. I'm gonna go to goal seek. All right, I got a number. Again, this seems really odd. Although not as crazy as this. I mean, this seems more plausible, but I don't know. Your cost of funds have jumped up to the 3x, 1/4. I don't know. It seems weird. Okay. Okay, percent of total liability. So you want to take this average balance over here, divided by row 89 over here. All right. You know what? I'm gonna mess around with 2019 because I want to see if I get like another answer that doesn't make sense. Okay. Here we go. Negative net interest. That doesn't make any sense. This could be a fat finger type of deal. Let's see. 3Q19. Which balances? $652,516. Okay, here's another. This is not correct. It should be, this was a year-to-date average for the 9 months. It should be, yeah, what's going on here? Six. All right, so this number is correct. That is interesting. All right, so, all right, we got that squared away. Goal seek. We want this cell to be 3601. Let's see what kind of number we get here. All right, this seems more reasonable. All right, so I use goal seek again. All right, so we're changing this guy over here to 1102. Changing this. That's off. Shouldn't be multiplied by 4 there. Probably the same over here. And rookie mistakes. But you live and you learn, right? Okay. I don't know what's going on in 2016, but I gotta look into that. So essentially, the end goal is, at least for bank models, are largely driven off the balance sheet. So you need to make assumptions in terms of how, to what magnitude is your loan book going to grow? So Morgan Stanley is a bit of a different animal. They're not like a traditional commercial bank per se. So in terms of percentage of their balance sheet that's held in loans, it's not that high. I mean, they only almost have as much cash as they do loans. Really, the bulk of it seems to be in trading assets and investments, which seems to drive up with, their institutional securities business as well as their wealth management and investment management businesses. So that completely makes sense. I'm trying to figure out. Okay, assets under management is completely. Oh, is it? Got separately managed accounts. How do I think about this going forward? I mean, most of this other stuff I have going forecasted as flat balances. I mean, essentially all I need is I just need to get here. Whatever total assets is, you take 74% of that, then you get your average balance. Then I'm going to assume a rate. Call it 0.0101. And this is likely to evolve, so rates are going to probably go up this year, right? So start at 101. Maybe in the back half of the year, it goes up 10 bips. And from there, to one. And we go up. And essentially your net interest is going to be this times that divided by 4. Okay. Eight, 6, 7, 8, 1. All right, let's see what we got here. So I think it's safe to say anything from goodwill and below is not going to earn any interest. It seems like maybe they're not including cash and trading assets in there. Okay, so let's see, average balance is 886,781. These are the assets you have in your books. Doesn't bring me quite there. $850, $870. Easy to overcomplicate and overthink these things, but This is something that's not reported anymore, so we can hide that for now. Okay. All right, so maybe I'll do something down here. Trading revenue divided by trading assets. So essentially what we'd be doing here is take your trading revenue, take your assets, but it should be an average. All right. So you take trading average. Should I annualize rate or not? I guess that's the question. I guess I don't need to at the moment, so no point doing that. All right, so jumping over from, this is going to be off. F E. So consolidated H and I. So I, it's going to be E and I. So we got to take this H. Worry about the annuals later. Okay. All right, so I've got trading revenue. This might even be a better way instead of assuming a growth rate. So get rid of this. I'm just going to assume a rate 0.95. That seems like a great number. Okay, so essentially, what's the thing with building these things? I don't have a ton of experience either, so okay, so all right, so you got your trading revenue. It's going to be function trading assets, just blank right now, times rate. Oh, So what do I want to do here then is the next question. Again, I can hard code a number for the time being. Do that. Or apply some kind of growth rate to it. Oh, shoot. See how seems to have been growing, maybe. Be the average. No, this is the ending. Essentially be okay. All right, I'll just leave it flat for now. For this. Then what essentially I'm going to do is, okay, I'm going to add all these. Let's see how they have it laid out here. Okay, all right. So here are your interest earning assets, securities, loans, trading assets, receivables, and other. So, okay. So, all right, 72. Then all right, so I'm essentially just going to take these balances for now, make them flat. Okay. All right, so then what I'm going to do, take some of these assets times that gives me that number. And I'm going to fork consumer rate. Then you take this times divided by 4 because it's an annualized figure. Great. Annual would be the average of the quarters. Be the sum. This would be average. All right, so your interest earning liabilities. I'm just going to this for it to values for now. Way to it, I suppose. Okay. So now I can just copy and paste this over. I'm going to assume that stays flat. And that stays flat. I'm going to assume this stays flat. I don't really have any better information to go off of at the moment. Okay, let's do. Okay. So retained earnings is going to be interesting because I need to figure out the dividend part of this equation and repurchases because that's going to be impacted. EOCI line, I'm going to keep flat too. Of course. This is going to be a function of repurchases. So I'll highlight that. Okay. So this is going to be another kind of hard code exercise. Okay, so essentially what I'm trying to do here is I'm trying to get a percentage. So it looks like 77% is where I want to be. It's going to be an average balance. All right, so this is going to be the average. Average balance, okay. Times okay, and basically it's annualized yield on your liability side. That's your cost of funding, essentially, or some kind of rough proxy. Okay, so 0.014 seems good to me here. That's probably going to go up in the back half. Call it 10 bips. We're going to go up another 10 here. Similar to what I'm doing above, just increasing it by 10. Okay, now I can calculate cost of funds. Great. I can do the same thing here, except that make sure you're using the averages of the right amount. Carry this going forward. Conspicuously, this number looks the same. Oh no, it's going up. It's going up. It should be going up. Okay. That's going to be the same. So I got to move over. Actually, Now I can calculate my NII. Great. Copy that over. Boom. So I gotta go back and fill this in, but let's not worry about that for now. Make sure I save that. Right, so now we got to work on the capital return. Share repurchases. Let's go to the press release. Let's see. Morgan Stanley. What's 16 earnings release? $1 billion of common stock. So is this? It says approximately 1,976,000 seems to round. Just want to make sure I have the right number here. Dividends and share. Oh, I'm looking at the wrong period. Jeez. Purchases. Okay. What happens when you have too many tabs open in your browser? Oregon Stanley earnings releases. I'm looking for first quarter of 16. 625. There we go. That's the number that we're looking for. See if that ties up. All right, so I'm gonna have to use a press release for this. These are approximate figures. So 625 is the number. 25 million shares. So you take this, you divide that. $25 a share. Huh. See if we can. Numbers in this 10Q seem to be different. They're all repos. Okay. Repurchase. You know what? Just take it at face value for a time being. Thing about dividends in this press release. Let's see, got the share repurchase note here. Divid. Ah. Okay, they're declaring a dividend. That doesn't mean they're paid a dividend. Trying to remember how we did this for insurance companies. Was it the dividend payout amount divided by average shares, which would be average diluted shares? Or is it 10? Go back to Q divid. see, they paid out 436 million of cash dividends. What's this 378 number? Man. Okay, I'm starting to lose a little bit of momentum here. All right, so if you declare 15 cents a share, right? You got your average up there. What does that give you? 287. All right, I'm sorry. Might be lunchtime. 287. Not tie into anything. 287. Okay. Back to the 10Q. That's a declared. That's as of. That's all I'm looking for. Guess I could go one quarter back in the PR and then see. Let's see. Oh, what is this? Financial supplement. What's out of it? Hey. Okay, this is going to be interesting. Okay. And okay, all right, so I declared same 15 cents. So we're good. So essentially, I guess what you could do is you could either take the dividend actual amount paid out here, divided by shares to get the per share amount, or you could go in reverse. Okay. And I haven't even done any of the ratios yet. Efficiency ratio, ROTC. Lots more to do here in this model. It's starting to take shape slowly but surely. Commissions and fees. Year-over-year growth number for the time being. Carry over, I think. There we go. Carry this. And this is for crude. Got that spike in the first quarter. Is that? Yeah, that's pretty seasonal there. At least for the past 2 years. Okay. Keep this going flat. Okay. All right. What am I going to do with these investment banking revenues? Okay. I've got a schedule down here. All I'm trying to get to is this line down here so I can hard code the advisory revenues. Here's something that I've also seen here. I could take, let's say, 4-quarter. I could take the average of the last 3 years and use that. Use that as a baseline. Okay. Yeah, this is that up by 20. So this will be 520, 540. Seems really elevated. Oh, is this due to could be the acquisition? So let's see, 1,000 here. Thousand, billion here, billion there. Fourth quarter. Seems like a billion there since need some moves, so call it 900. So this should actually be run rated a little bit higher. I'll call it 880. This doesn't seem like it's really changed much since the acquisition. So I can do 450, 450, 500. Or five. Show growth. Yeah, something's stuck in my throat. Trying to make sense out of these advisory revenues. Let's see. This seems really like a real big outlier. I don't know. That down 7, 650, 7. Then what I could do is take 20. Showed some growth. See, how does that look? It grows a little bit every year. See why we couldn't make that assumption, generally speaking. Ooh, what happened there? What is going on there? Oh, okay, because of that outlier. Yeah, I don't think that's going to happen again. That's just a monstrous third quarter. Could it happen? Sure. Is it likely to happen? Okay. Carry this over. Not using it as a driver. Trading revenue. Go with that. 40. Still, what am I gonna do? This investment banking revenue. That in for now. Okay, I think I'm at a good stopping point, so I'll continue this later.